Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Brian Stutland, Chief Investment Officer with Equity Armor Investments. And Brian, really the tale of the tape recently has been that shift from value and commodities into growth names. We're certainly seeing that for the most part today.
Yeah, we are. Well, not just today, Jill, but actually over the last month, if you look at some of the returns of the Nasdaq, up about 3% or so, value's actually down 1%. And we know a big chunk of that value is actually names that are in the commodity style business, whether it's energy or names tied to food and the likes and such. So certainly it looks like there is a little bit of a shift into growth.
And Brian, let's talk about bank earnings that came out this morning. We have a couple of others that we have to focus on for Friday and Monday, but really, Morgan Stanley and JP Morgan, it seems as if some of the commentary suggested that there could be a little bit of pain, in the economy over the next quarter or two.
Well, certainly it's a little bit of a concern. I didn't really love JP Morgan earnings that came out. The stock is down. We do own it for clients, but they struggled a little bit, and that has me a little concerned about the rest of the earnings season and how the back half of this year is going to go. If you look at some of the similarities in the breakdown of the commodities, like we just mentioned, we saw that breakdown at the back half of 2008. And then guess what happened? We obviously saw the markets crash out and everybody else sort of follow suit. So we really do need to get some better earnings clarity out of more banks to come and some of the technology names, the big names like Apple, Google, Microsoft, and those names coming out at the end of July.
And what do you think about oil here? It's trading at lows that we have not seen since February. When do you think we'll start to see some alleviation at the pump?
Well, I think you're going to start to see it. And Jill, to be honest, the PPI number that we saw this morning was a little weird. The energy was up month over month, but yet we've already seen crude come down significantly since the end of May, right? And we've seen gasoline futures trade lower. So those numbers are coming down. It may take another month for that to hit at the pump, but I expect that to be a little bit of a sort of boom for the consumer discretionary side in people's pockets at home, because I do see some of the energy prices going down. Now, that doesn't mean the economy is in great shape. It just means the pump's going to be a little bit cheaper when you go to fill up a tank.
Well, yeah, let's hope here, because doubling over the past couple of years is certainly feeling in everyone's pockets here. In terms of Fed policy, again, back to your points with CPI and PPI, do you think they remain on track?
Well, I think they do. The numbers still aren't great. I mean, we're starting to see some shift in the marketplace where commodity prices are down in the last month, like 15% or so in some areas. So some of the rate hikes are taking effect. I still think they have a little to go. Will they get to the point? If you look at the 2-year Treasury, the interest rates there, 3.25% trading above the 10-year. I think those are a little extended to the upside. I don't know that the Fed quite gets to that level, but I do think we have another significant rate hike to come. Then we'll see what happens. We'll see how the market sort of digests things. Again, the earnings picture is going to be huge coming up in the next couple of weeks to see how that goes. If we see further sell-off, the Fed might be on pause in the second half of 2023 as we go a year out from now.
All right, Brian, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.